What's going on, everybody? Welcome back to another video. So in this one, we're going to be breaking down exactly what was said by Jerome Powell today in the FOMC meeting and what we have to look forward to going forward. Now, first, everybody take a step back. Take a deep breath. We just came through some of the craziest volatility that we've seen in a while. We had CPI yesterday. We had the FOMC meeting today. We can take a little bit of a breather, but now we have an indication of where we're most likely going to go in the future. So again, guys, before we get into all of that information, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into the charts here. And take a look at the SPY on the daily time frame. So as you guys can see here, a lot of volatility coming in here on these daily candles. So we are seeing the MACD losing its bullish momentum here. The RSI did what we like to call rimming its moving average, starting to pitch back to the downside here. And when we take a look at this on the 4-hour time frame, we're seeing a relatively similar picture here. We did see some movements to the upside and we're starting to come back down. But again, I do want to highlight a little bit of what's happening on the intraday time frame here. We did see this little breakout of the highs. We started to move back up and then we saw all of that crazy volatility towards the end of the day with Powell, which I know you guys all made a bunch of money on. I was taking a look at the gains channel. You guys absolutely killed it. But let's give you guys a couple of pretty key price targets on the SPY that you could definitely see. Now, we've been talking about this 396 to 396.50 magnet zone, and on the pretty significant drop that we had today, we came down right in between about 396.31, I believe, and then we bounced back above. I would say that if we're going to see any downside, really be careful of that range between 396 to 396.50. We've seen price hover around there and almost use that range as a magnet many times in the past. And again, a break below 393 to 390, very significant. In a breakout of these recent highs right around 410, 414 would be relatively significant to the upside as well. But I do have a little bit of an announcement for you guys. Again, this is our brand spanking new platform. If you guys do want all of what we were previously offering in our Discord, plus much more, we have unusual options activity as well. As you guys can see here, you guys all get a free trial for 21 days, completely risk-free. If you guys do want to come in there and check out what we're doing, make sure you guys check out that link down below. And again, these aren't necessarily typical gains over here. I know you guys are absolutely crushing it and taking on a little bit more risk sometimes during the FOMC days. But Tommy, congratulations here. Swat that fly, 2.5% day here. Ghost absolutely killing it here. And we do have a couple of other big ones as well. Hyper One, a 71% gain on his portfolio today. Again, guys, we love to shoot for these base hits 1 to 2% per day with limiting risk and trying not to shoot for these moon tickets. But congratulations to those of you guys that were able to fully capitalize on this on today. And welcome to all of you guys that are about to come in there with us. Now, I do want to go over the dollar chart a little bit here as well on the daily. You're seeing the dollar lose all of this momentum here that it had to the upside. We're just seeing it get trapped in this nice little channel to the downside. Now, again, if we are going to see any sort of really aggressive market movements down, you're going to need to see the dollar recapture its 13 EMA on the daily, recapture the 200, and start that move to the upside. So again, very similarly over here, we are going to also be making another update to the TLT video. Especially after what happened with Powell today and some of the statements that he made. So there were a couple of key things there that I'm going to need to do a little bit more research on in order to give you guys a better understanding of when this TLT play could happen and kind of the mechanics behind it. But I do really want to talk about exactly what was said today by Powell. So all of you guys know by now that we did receive that 50 basis point rate hike, but there's a couple of things in here in the statements that Powell made, which were very interesting. Now, in short, essentially what Powell said was that there's just so much uncertainty out in the market. And if you have been listening to anything that I've been saying about the Federal Reserve and the statements that they've been making over the last couple of months here, and I've been reiterating this to you guys as well, especially during the times when people start screaming for a pivot, Powell said again today that it is no longer a question, or it's no longer the most important question of how high we're going to raise rates at each individual meeting, but how high are we going to go in terms of the terminal rate and how high are we going to stay there? And those are two questions that Powell, the Federal Reserve, me, you, you, nobody can answer right now, which can create a lot of uncertainty in the market. The other thing that we need to look at here as well is that the United States Central Bank's projection of the target federal funds rate rising to 5.1% in 2023, slightly higher than investors expected heading into this week's two-day policy meeting. If you look at the summary of economic projections as well, you also see unemployment shooting up into the 4% range and staying there, which we can make another video about here as well. But what I really want to talk about a little bit more are some of the more key things that Powell has said. Powell, the labor market remains extremely tight. A restrictive policy stance is likely needed for some time. Now, I don't know if you guys, that all of you guys watching this video were in my live stream yesterday and have kind of seen it on Twitter or any other live streams, but there are either a lot of people, whether they were bots or real people, who might just think that Powell is going to be pivoting or lowering rates or not raising rates by enough. He reiterated today that is just not realistic right now. Remember, our long-term inflation target, which we're going to talk about, is 2%, not 7.1. So yes, it is a very good sign to see that inflation is coming down. But as Powell says here, that we still have some ways to go on rate hikes. We are not out of the woods yet, and he's not really showing us where that light at the end of the tunnel is right now. It could come midway through 2023 where we start to see things really start to almost open up the book and we start to see where the storyline is going to go, but we are not there right now. Now, the stance isn't yet restrictive enough even with today's move, meaning that even after today's rate increase, we are still not yet restrictive enough, which is why we're also seeing the 5.1% expected terminal federal funds rate by the end of 2023. And this is the really interesting part right here, which kind of leads me into that TLT video that we're going to be making for you guys. No rate cuts until confident inflation is moving towards 2%. We talked about this a little bit in some of the live streams yesterday, but it's very possible that if Powell doesn't continue with these jumbo rate hikes with 50 or 75, that inflation can start to aggressively move down and then flatline. That's a very, very bad thing to have happen because the federal funds rate is going to be continuously increasing. Now, if that were to end up happening, inflation comes down and makes a little bit of a J or an L in flatlines, and the federal funds rate is still creeping higher, but not necessarily enough to continue the move in inflation to the downside. Well, what it calls for is more aggressive rate hikes. Now, those of you guys that might be new here or don't necessarily understand how bad this could be if that is the route that we're going to go, unemployment going to go much higher. Our overall, our equity markets are going to get hit very, very significantly if that is the case. With what Powell is doing right now, I'd say we're in a decent spot to get to where we need to go eventually. Now, Powell also says we will have to hold restrictive rates for a sustained time. What is that time? We don't know. And that's the thing that I want you guys to all understand here is that the statements that Powell's making, every single thing is pointing to uncertainty. So when one piece of data comes out, whether it be CPI, PCE, consumer confidence, real estate data, and then you see this narrative of a pivot in the markets reacting positively, you have to go back and think about the overall broader system and the broader problems that we're having in our market right now. Have we received the answers to these questions yet? What's the terminal rate? How long are we going to stay there? When are we going to start backing back off? And when is inflation actually going to move towards that 2% target? We don't know. So every single time that we see these random pivot rallies, in the back of my mind, I'm thinking BS. Which is why I'm always so cautious when we're talking about basically bullish moves in the market right now, because personally, I do see there being more downside, especially with how things are looking going into 2023. How much downside? Again, very uncertain depending on where things are going to go in the first quarter of 2023. And the thing that you need to really watch for soon is going to be earnings and more layoffs. Now, coming down here a little bit further, this was probably one of the most interesting questions that we saw in the FOMC meeting. At the presser, Powell slaps down any notion of rethinking the 2% inflation target anytime in the foreseeable future. The question was asked, basically, are you going to readjust that long-term inflation target of 2%? He essentially said, no, that's not what we're thinking about right now, but he did say he left the possibility of revisiting the target open down the road. So basically in 2025. In my opinion, if they're going to let inflation run a lot higher than expected, that's not good. You can see a lot of growth in equity markets, but there's a lot of other problems that come with this. Prices of things continuously get more expensive, very similar to what we were seeing over the last year and a half as inflation started to run rampant. Now, Powell even saying there could be a longer run project looking at inflation, looking at the inflation target. It's dovish. But overall, what Powell was saying was overall hawkish in this meeting. And even though that statement about the long-term inflation target is dovish, it's not necessarily good for the overall system. Now, again, I believe there's one last thing I do want to touch on a little bit lower in this article here. The Fed's actually pretty hawkish here, and this is what the former Federal Reserve Bank of New York, President Bill Dudley says. He also draws attention to that diplomatically phrased comment from Powell at the start about the need for financial conditions to reflect Fed tightening action. The problem with some of the things that the Fed is doing right now is they aren't going to come out and say that they want to see unemployment go up, but it's necessary in order to get basically all these other data points and other contributing factors to inflation to subside and really start to allow the system to get back to some sort of normalcy. So overall, the takeaway from this meeting is there's a lot of uncertainty, and the main question still remains, what is the terminal rate? How long are they going to keep it there before they start backing off? That's the light at the end of the tunnel, and that's also potentially where the TLT play can come, which we are going to go over in a separate video. But again, guys, that's going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great day. See you in the next one. Peace.